We talk about South African winemakers, and they're increasingly looking towards new markets in the wake of declining demand from the financial-stricken Eurozone, and new wine trade routes are pointing to China. Thomas Maree reports.
The Eurozone crisis has had a punishing effect on South Africa's wine industry. Exports to the UK, traditionally South Africa's largest wine market, have decreased by almost a quarter since 2004, according to South African wine industry statistics, with the trend intensifying following the recession.
We've found that there's been quite a shift from taking bottled wine from South Africa to taking bulk wine from South Africa and from other countries like Chile or Australia or whatever, and bottling them in Europe to make the wines more competitively priced. But that obviously has an effect on the returns back home.
The effects of these structural changes in traditional markets are pressing local wine producers to look east. Since 2007, exports to China have increased by 75%, according to SAWA's. But this new trade route is not without its challenges.
The Asian market is actually regarded as the biggest consumer growth market for the next 10 to 15 years. And we should focus, but it's very difficult to get into that market. It's very much relationship-based, trust to be established, and it takes a very long time actually to build that relationship and to get into that market.
First of all, look at where China is on the map. Realize that it's just not just one homogeneous market, it's actually a collection of different regional markets, each region being very different from the other. For example, consumption patterns and style preferences in Beijing is very different from Shanghai, is very different from Guangzhou, it's again very different from Shenzhen. So there's quite a few different provinces, and also just look at your limitations, see what your production capacity is, how much you can supply, because it is quite a very big market.
These factors are prompting wine producers to come up with creative strategies to overcome these cultural hurdles.
Due to the fact that we receive such a lot of Chinese tourists here, we decided that we need a Chinese-speaking gentleman that's based in China that can deal with those visitors while they're here. And what he's basically doing is selling our stock, which is already in China, to them, and which will be delivered to them individually once they're back in China.
Another challenge faced by local wine exporters is volume. South Africa produces only 4% of the world's wine.
I think the most important thing is if you look at other wine producers, South Africa doesn't have the ability to increase their production. The Australian producers doubled their production in a matter of 10 years. South Africa don't have that ability because we restrict it in terms of water.
With this in mind, export bodies are marketing local wines as niche premium products in the Chinese market.
South Africa isn't a cheap place to produce wines, but it is a cheap place to produce premium wines, handcrafted wines, beautiful wines. So the whole drive for the last 20 years has been to try and trade upwards, and we're making wonderfully exciting wines today which are competitive with the best in the world.
Total volumes exported to China are still small relative to South Africa's traditional developed export markets, but trends are showing strong growth. The key for local producers will be the ability to position themselves effectively in this new market. Thomas Maree, Cape Town, South Africa.